Hey everybody, thank you so much for checking the channel out today. My name is Agabus. We've got some important news to reflect here today regarding inflation. If you haven't been paying attention, the inflation numbers came out today and they are a bit higher than what people had expected. So let's just jump into it today. As always, quick plug, if you like what you see, make sure to like the button below, subscribe if you want some more content, and drop a comment in the comment section below on any feedback or comments or whatnot you'd like to provide. Thank you so much. Today we're over here at CNBC. The article says Fed officials see restrictive policy staying in place until inflation eases, according to the minutes. Federal Reserve officials at their September meeting deferred on whether any additional interest rate increases would be needed, though the balance indicated that one more hike would be likely, according to the minutes released on Wednesday. While there were conflicting opinions on the need for more policy tightening, there was a unanimity on one point that rates would need to stay elevated until policymakers are convinced that inflation is heading back to 2%. The document noted that all members of the rate-setting Federal Open Market Committee agreed they could proceed carefully on future decisions, which would be based on incoming data rather than on any preset path. Another complete agreement would be that the policy should remain restrictive for some time until the committee is confident that inflation is moving down toward a sustainable objective. Last month, as you know, they decided against a rate hike. However, according to the dot plot that they release, it shows the committee indicates one more increase will be needed before the end of the year. The FOMC, since March of 22, has raised its key interest rate 11 times, taking it to a target rate of 5.25 to 5.5, which is the highest in 22 years. Moving on to another article from CNBC, consumer prices rose 0.4% in September, which was more than expected. The CPI, a closely followed inflation gauge, increased 0.4% on the month, or 3.7% from a year ago, according to the Labor Department. Excluding volatile food and energy prices, which I would argue is more weighted to most people, the so-called core CPI increased 0.3% on the month and 4.1% from a 12-month basis, which was in line with expectations. In keeping with recent trends, shelter costs were the main factor in the inflation increase. The index for shelter, which makes up about a third of the CPI, accelerated 0.6% for the month and 7.2% from a year ago. Energy costs are on the rise as well, 1.5%, including a 2.1% pickup in gas prices, 8.5% in fuel, and food was up slightly at 0.2% for the third month in a row. On a 12-month basis, food costs are up 3.7%. Markets showed only a modest reaction to the report. Stocks edged higher at the open, while Treasury yields came off previous lows with lower duration notes little changed. The CPI increase meant worker wages fell in real terms. But on the bright side, the Social Security benefits will increase in 2024 at 3.2%, which the acting Social Security Commissioner says will help millions of people to keep up with expenses. In Washington, the Social Security recipients will receive 3.2% increase in their benefits in 2024. There's a cost of living adjustment that takes place every year, and it means that the average recipient will receive $50 more each month beginning in January. The Social Security Acting Commissioner, this will help millions of people to keep up with those expenses. This is around 71 million people in the U.S. who receive Social Security benefits from retirees, disabled, and children. Thursday's announcement follows an 8.7% benefit increase from this year, which is brought to us from 40-year high inflation. Compared to last year's 8.7% increase, this year is going to feel small, and the perception is going to be that it's not keeping up with inflation. From the article we just read, it doesn't sound like it will. However, retirees can rest a little easier at night knowing they will soon receive an increase in their Social Security checks to help them keep up with rising prices. We know older Americans are still feeling the sting when they buy groceries and gas, making every dollar important. Fun fact about Social Security, it's actually financed by payroll taxes collected from workers and their employers. The maximum amount of earnings subject to Social Security payroll taxes will be $168,000 up from 160 last year. However, due to the lopsidedness of the finances, the program faces severe financial shortfalls in the coming years, and some are estimating that the Social Security bucket will run dry in 2033. And if that happens, those who are on benefits will only receive 77% of those scheduled benefits. Just want to bring some updates in regards to inflation reports. Hope this is helpful. As always, stay informed, stay inquisitive, and stay subscribed for more. Thank you so much for checking the channel out. We will see you tomorrow.